All right. I see that people are coming in. That's good. Can everybody please, or some of you, confirm in the chat that you can hear me loud and clear? Great, thank you. Very nice. So we're just going to give everybody a few minutes to come in. So no stress, still time to get a quick cup of coffee if that's what you need before we start. Can you guys still hear me? Good, good, good. All right, and all of our speakers also coming in now, so that's good. I think we can just about start today's webinar. So first I'll run through the program, just an overview, and then we're going through how to ask questions and the basics before we hand over the screen to the first speaker. So I would like to welcome everybody to our webinar, Real Estate Tokenization and Decentralized Trading. We have a lot of signups today, so obviously this is a very popular topic, and we're very happy to have you all join us. The program for today will start off as usual with Klaus Skåning, CEO of DigiShares, and he will do a tokenization industry status update and talk about DigiShares traction. Then we will hear from Mark Denker, VP of Blockchain Development at DigiShares, and he will talk about real estate.exchange and the BRIC token. We will then hear from Jeremy Musigi. He is the head of growth at Balancer Labs. He will talk about Balancer and liquidity for tokenization. Then we will move on to Benny Isembert. He is the CMO of Concordium. He will talk about ethics in tech and the challenges of Web 3.0. We will then move on to today's first case study, which will be BRIC. And the case study is named The Secret of Liquidity and will be presented by Luis Miguel Alexio. Then the second case study of the day is by Pallav Agrawal, co-founder and CEO of Decentralized, and he will talk about Decentralization, blockchain in capital markets. Throughout the day, you can ask questions to the speakers while they are on, and it's important that everybody ask your question down in the Q&A section at the bottom of the screen. If you ask questions in the chat, they may be answered by anyone, and they're quite difficult for me to see when things are happening very fast. So directly to the speaker, please ask them in the Q&A. And it's also good if you could mark down which speaker you are asking for, just to make it clear. So if you have a question for Klaus Skåning, write Klaus and then your question. Then that will just be crystal clear for me who that question is for. We will end off today with a fireside chat and AMA. And if you have a panel question, then it would just be great if you would write panel and then your question, so we know this is for the panel. And with that said, I might remind you all of this later. With that said, I will give over the screen to Klaus Skåning. Klaus, can you take the stage, please?
Yeah, at least the virtual stage.
Yes.
Thank you very much. I hope everyone can hear me. My name is Klaus. I'm the CEO of DigiShares, and it's a great pleasure to host the webinar here today. This is, I think, the most exciting one we have had yet. Of course, DigiShares is a company that provides infrastructure, solutions, and technology for tokenization. So we provide a white label platform for tokenization, primarily of real estate, but also other types of assets. And as such, we are primarily a software provider, enterprise software provider that works with white label partners around the world. We don't normally go directly to market, but only tokenize through our white label partners indirectly, you could say. But we have decided to make a strategic bet on creating an exchange for real estate assets and potentially also for other assets longer term. And this is sort of what the concept of today's webinar will be focused on. So how can we get more liquidity for real estate and other assets, and how can we do it with DeFi technology, decentralized exchange technology, such as automated market makers and liquidity pools and so on, such as we, for instance, can get from Balancer, our strategic partner in this project here. So today we will describe our approach and our vision for how this can be achieved. But of course, we will be also discuss generally sort of how the industry is moving forward in this space, and what is being done, and how we see the future of this. So our strategic bet in this space is really to create the what we call real estate.exchange, and to launch a token called BRIC in order to facilitate a network effect around the exchange, and to make it easy for our white label partners to list their assets and achieve a high degree of liquidity, and to make it easy for investors to trade and to get access to real estate assets. So of course the longer term vision is to make a bridge between DeFi and real world assets, which I think has been the holy grail for some time. The market, there is around $228 trillion of real estate assets around the world, and only 2 or 3% is available for investors right now to invest into. If we could just increase that with a few percent or even more than that, then I think it would be of huge importance to the DeFi space, and sort of increase the DeFi space a lot, and also make it possible for DeFi and crypto investors to diversify into something that it hasn't got the risk of dropping to zero in a short time, but is extremely stable and has a solid yield and a solid growth over the years, such as real estate. That's what we will talk about today, and Mark from our team is primarily responsible for this project and will introduce it and give you the details. Then Jeremy from the Balancer Labs, we are really proud that he can speak here today. Will go into more of the of how they view the space and what kind of technology they provide to achieve this. We have Benny from Concordium, who is an advisor on our project, who will give his perspective on this, and how important it is that we are regulated and that we play within regulations and stay compliant in order to give investor protection, and to make sure that we play by the rules and create something that is sustainable and compliant and in line with regulations both now and in the future. Then we have also 2 of our white label partners presenting today here, BRIC BC and the Civilization. Both of them are included today because they are very sophisticated in their strategic thinking in relation to crypto, blockchain, and DeFi, and it will be interesting to hear about their projects as well. And then there will be a panel at the end where everyone can discuss and ask questions. The next webinar is in January. It's focused on global regulations in relation to tokenization, and we will actually issue an industry report in December focused on EU regulations that is relevant for tokenization, and that will sort of be discussed also at the webinar. Of course, regulation is changing all the time, and it's really important for us to monitor it all the time and to stay on top of it. We are physically present at the Blockchain Expo next week in Amsterdam. Look forward to seeing either of you present there. We are also at the MIPIM conference in New York City in December, and also at the RedCon conference again in Miami later in December, also with a stand and physical presence. From our perspective, the tokenization industry is still developing well. Our small part of it is certainly expanding quite fast. So we signed up 5 new clients, 5 new white label partners during the last months. 1 in South Africa, 1 in the US, 1 in New Zealand, 1 in Spain and France, 1 in Monaco. So it's very globally distributed, and there's still a great variation, but I would say still 80 to 90% of what we work with is real estate. Not surprisingly, because it is the largest asset class. Otherwise, I would say the big news on our side is that we are setting up a subsidiary in Germany, DigiShares GmbH, in order to better service German-speaking clients and to expand our presence in Germany. And we have also just been informed that we are a finalist in the Ernst & Young Entrepreneur of the Year here in Denmark. So that's also quite exciting for us. So that's basically it from my side. I don't think there's time for me to take questions, but we will if there are any questions for me, we will just keep them for later in the panel. Thank you.
And remember, everybody, that if you have a question for Klaus, write Klaus followed by your question. It just makes things so much easier. Klaus, thank you very much. That was a great update and lots of things happening. I'll see you later in the panel, yeah? All right, and then we move on to Mark Denker. Mark is, as I said, the VP of Blockchain Development at DigiShares, and he will be talking about real estate.exchange and BRIC token. Mark, please come onto the screen.
I don't think I can. You blocked my video, but I would love to.
I did not block you, but see here.
Okay.
1 moment. Try now.
Right now. Great. You
Yes,
guys see me? I can see myself at least.
We see you too.
Awesome.
So,
well,
yeah,
isn't that a great start of the presentation with my face? Then it's going to go super well, I'm sure. Are you guys able to see my presentation here? Maybe someone can confirm before I just dive in. You guys can see my screen, or? Okay, nobody's responding, so I assume that you can. All right, so today we will talk about, I will talk about BRIC and real estate exchange, which we have been working on in the background for quite some time. Just to take it from the top, tokenization is, and tokenization of real world assets is the holy grail, as Klaus already mentioned. The World Economic Forum estimates that 10% of global GDP will be on the blockchain by 2027. Putting real world assets on the blockchain is a necessary mean to get to that goal, no doubt. I mean, the crypto market is growing, but you know, if you really want to grab or capture 10% of global GDP, we'll certainly need real world assets there. So that's what we are working on. DigiShares and real world exchange has a unique opportunity, I believe, if you ask me personally, to solve this issue. And hopefully I'll make that clear why in a second. Just to talk about DeFi, decentralized finance, which is the space that has sort of exploded the past 1.5, 2 years-ish. You can see the historic graph. Maybe I can remove this so you can see the actual number. So since 2017, you know, DeFi was sort of a dead thing. Most things in DeFi are built on Ethereum, and that's when Ethereum really started to gather some interest from the development community. But only of recent, as you can see on the historical chart here, only of recent, it's the DeFi space, decentralized exchanges, and being able to trade and transact in a decentralized way, it has really picked up steam. Since last year, in November 2020, it's a sector that has grown from $12 billion to now surpassing $100 billion. Well, at least until the recent correction that we saw with crypto dropping, what, 10-15% or something. But nevertheless, even though DeFi and crypto is fluctuating a lot, proponents argue that the financial industry is undergoing the largest changes in the next 10 years than it has compared to the previous hundreds. The train is coming, and it's coming fast. And we see that, I think, by the total value locked into DeFi, the curve or the trend is pretty clear. Now, when it comes to real world assets and DeFi, there are a couple of challenges. That's why we don't see it really today, even though the DeFi space has been around for 4 years. Right now, DEXs, decentralized exchanges, are just, quote unquote, focused on crypto assets. No securities are really being traded on the top decentralized exchanges. And what has happened, and that's why it hasn't really gained much traction, is that the DEXs, the decentralized exchanges that has added real world assets, they have isolated the liquidity to only their liquidity pool or their system. And as a result, because the markets have not been very liquid, as a result, the price impacts, which is what I'm showing here in the screenshot, are excessive. Just trading, in this example that I show here, just trading $1,000 worth of a certain real world asset moves the price more than 70%. In practice, I mean, the decentralized exchange works in theory, I guess, but in practice it's unusable, right? Because you would never go in and trade any asset that has a price movement or price impact of more than 70% when you only trade for $1,000, especially not real estate, as you can imagine, which is typically larger trades. So why am I telling you all this? I'm telling you all this because we are overcoming this issue, or trying to overcome this issue with our efforts by partnering up with blue chip, I would almost call them, protocols like Balancer. Balancer, as I show here, is the 4th most popular DEX, and hopefully soon taking the top 3 spots. I would at least argue that it should soon enough. But Balancer, as you can see here, has more than $2 billion worth of value locked up in their protocol, which means that when we integrate with something like Balancer, we tap into more than $2 billion worth of liquidity that is already in their protocol, and hence avoiding an issue such as very large price impacts. This is where real estate exchange comes in. So we will partner up. Our approach is to not do everything ourselves. Our approach is to partner up with people who are doing outstanding work already, such as Balancer, and Jeremy, and perhaps also Benny will talk about that more in a minute. But our approach is to partner up with them, link to do what we do best, which is in this case focusing on issuing tokens and list them on our decentralized exchange, which is called Real Estate Exchange. And then the rest, basically link to the rest, such as protocols like Balancer. And the features that we will provide in the Real Estate.exchange is, first of all, issuance. You need to be able, in order for you to trade real estate on the blockchain, you need to be able to issue your tokens. Now, when you do that, there are certain things that you need to have in place. You need to verify ownership of the underlying assets. You need to know that it's not just hot air that is being sold, but actual real estate. You need to whitelist wallets, so you know who can trade and hold tokens in a compliant way. When you deal with security tokens in general, compliance is a whole nother threshold than just native crypto assets. So issuance, there are certainly some regulatory pieces that we need to have in place before we just set this up. Liquidity, which is very much the holy grail, if you ask me. Why would you, as a real estate developer, issue tokens on the blockchain? Well, you would do it if you know that you would tap into a very liquid market, basically making your very illiquid investment, your real estate asset, into a very liquid one if you issue it on the blockchain. So liquidity is, if you ask me, the holy grail, and this is certainly where Balancer, the partnership with Balancer is key. And then finally, collateralization. Once you have a liquid market around your real estate tokens, you know the price of the real estate tokens or the real estate property, then you open up for all kinds of cool applications. One is the collateralization, where you can basically borrow against your real estate tokens, which I will talk about in a minute. So yeah, just to give a little bit of overview, a little bit of color on this. DigiShares have already specialized for quite some time in issuance. DigiShares is setting up white labels for real estate developers already, and we will tap into a lot of this knowledge for real estate exchange. No need to reinvent the wheel when we know how to do it. So you could expect something similar to what DigiShares are doing on real estate exchange when you issue the tokens initially, with all the compliance built in, all the corporate management and internal trading that can be done. On liquidity, as I mentioned a few times, we will tap into special balancer pools. The one of many things that is cool with Balancer is they are really set on getting traditional finance onto the blockchain or into DeFi. And it's very clear from my seat that they are committed to that. They are building new types of liquidity pools that has never been seen in DeFi before, where all the compliance mechanisms are built in. So we are some of the first, from what I understand, to work with this, at least within real estate. And it's looking pretty damn good, if I must say. By doing this, obviously, we will have liquidity and perhaps even trading volume from day one. We don't have to invent the market. It's already invented and operating on Balancer already. And then finally, once we have the issuance and the liquidity in place, this price discovery will start happen as people are trading with each other. Then we can start doing all these cool things like collateralization. We are talking to protocols that exist already, back to the original ethos that we want to link to people who are doing it already and doing it well. Aave is a very big, if not the biggest, liquidity market on the blockchain, where people deposit tokens onto their protocol as collateral, and then the liquidity market on Aave allows you to borrow against those tokens. Now Aave is introducing an Aave Pro version, which is basically Aave just whitelisting the wallets. So you need to identify yourself, do KYC, etc. And that's the missing piece in order for security tokens and real estate in our case to be able to operate with liquidity markets like Aave. So with Aave Pro and with real estate.exchange, you hopefully will be able to deposit your real estate tokens that you own and then borrow against them. This is probably a bit down the line. It's not going to happen tomorrow and not the day after tomorrow either. But this is certainly something that we see on the roadmap and what we want to be the first at solving together with Aave, for example. And last but not least, I just added a quick slide on this because a lot of this is possible because we are introducing our own utility token called the Brick token. I can't tell too much about it, mainly because we haven't finalized everything around the legal setup. And until we have that, we're not able to sell the tokens and promote and all these things. So I'm just going to be extremely brief, and if you want more information, feel free to reach out. We can go on a call and a more deep dive. But basically, as I said, BRIC is the centerpiece very much between all the real estate tokens, which I call RE1, RE2, etc. on the right side here. BRIC is very much working as a bridge between those and all the other crypto assets that you see already on Balancer and other DEXs, including Ethereum, USDC, a stablecoin in the US dollar, DAI, Matic, and all the other crypto assets that you're already able to use and trade with on Balancer. But yeah, to summarize, reach out if you want to hear more about our BRIC token and of course our DEX, realestate.exchange. Thank you.
Very nice, Mark. I know that you're not joining the panel, but there is one question for you, and we just have a few minutes.
Yes.
So it says, can you describe the properties of the token? And the question is, does it represent direct ownership of the real estate?
So the short answer in terms of owning real estate, that's a no. I believe I can talk about this. I hope nobody's going to come after me for this. But we have certain utilities built into the BRIC token, but it's not necessarily owning the underlying real estate token that we see. So remember that these real estate tokens are being issued by, let's say, a real estate developer. And then what happens is a real estate developer will issue the tokens because they own the real estate ultimately. And then next step after they've issued it is to be able to make it liquid. In order to make it liquid, you need to add your tokens to a pool. If you want to add your tokens, your real estate tokens to a pool, you need to have a certain amount of BRIC. This is where Balancer, again, I think are quite pioneering because they allow for the weights in a pool to be different from 50-50%. Normally, when you go on other DEXs, you have to provide, if you want to provide 1 million worth of liquidity, you have to provide 500,000 of the real estate token and 500,000 in BRIC token. But you as a real estate developer, you won't necessarily want to buy 500,000 worth of BRIC token. And that's where the smart pools are clever because we can change these weights so it doesn't have to be 50-50. Now, in terms of the exact utilities that we build into the BRIC token, I prefer to take that on a separate call, just so I don't promote something that I'm not allowed to yet. Hopefully, I will be very soon, but I don't want to run the risk of promoting too much at this point.
That's quite all right. I'm sure you will get the opportunity. There is a follow-up question by anonymous attendee, but I think that is more appropriate for Balancer. And also, your time is pretty much up. Thank you very much, Mark, for joining us today.
All right. Thank you, everyone.
Bye-bye. All right. And next person up is Jeremy. Jeremy, yes, there you are. Can you unmute?
Hi.
Hello. And you should be able to also share your screen now.
I don't have anything to share. I'm just here to, have a fireside chat or AMA, however you would like to conduct it.
All right, well, you can start talking and people can start throwing in their questions. There is already one for you. It was sent to Mark, but I think it's more appropriate for you. So you let me know when you want to take questions and we can do that together.
Yeah, so I'll introduce myself. My name is Jeremy Musigi. I'm head of growth at Balancer Labs. It's a little bit of a nebulous title and it has evolved over time, but my primary focus is identifying and prioritizing market opportunities for the team, as well as leading the strategic direction of our partnership team. So I also was involved in setting up, helping to form the Balancer Grants DAO, which is a decentralized organization within the Balancer community that manages a fund denominated in BAL tokens and allocates those tokens to projects that are building innovative, valuable technology within the Balancer ecosystem. And the DigiShares and Real Estate.exchange team is one of those recipients that we're all very excited to be collaborating with. So as far as today's conversation, I'm happy to discuss any questions that you have. There's no prepared talk or anything like that. So it can just be an open format if either the audience here or the DigiShares team has any questions they'd like to dive into.
All right, well, everybody in the audience, this is your time to go down into the Q&A, and we already have one from Anonymous, and that is, how does Balancer evaluate the value of the security tokens?
How does, sorry, can you repeat that?
How does Balancer evaluate the value of the security tokens?
So
I'm guessing they're asking about price discovery, really.
Yeah, so
Yeah.
pricing on Balancer is all market driven. So liquidity pools on Balancer are designed such that they are they hold specified weights in each asset that they hold. And these liquidity pools can hold multiple assets, minimum of 2. And these assets are traded against each other to maintain, those weights as price moves and fluctuates. So Balancer, I would say itself, is not setting prices. Balancer is reflecting the prices of the market, and it is rebalancing. It's essentially an automatically rebalancing portfolio that reacts to the prices of the market. And that is done essentially through arbitrage. So if something is underpriced in a Balancer liquidity pool compared to its perceived market value, then it'll be purchased more. If it's overpriced, it'll be sold more. And that will, that's how prices are balanced and determined on Balancer.
All right, I think that's
one last note on that. So I think you might be wondering, what if it's a brand new token that doesn't yet have a market price? A token that isn't being traded anywhere else, does not have like a big liquid market for it. So one way that teams are utilizing Balancer is to do these token offerings, basically releasing new tokens onto the market through what's called a liquidity bootstrapping pool, or an LBP for short. And this is a mechanism where a new token that has never been traded anywhere else before is brought on to the market through a reverse Dutch auction style sale. And without going too far into it, but if people have questions, I'm happy to go further. But through the mechanics of this type of Balancer pool, there is a continuous downward price pressure that is put on that token as it goes through a price discovery process, starting at an intentionally high price, dropping over time, and allowing the market to determine when it has reached fair market value and to buy it at that point. So there is a confluence of upward and downward price pressure that leads to a price discovery process, which by the end of this sale period, which might last 24 to 72 hours, typically will not only determine the price of the token, but also distribute that token into the hands of the buyers who are participating in the sale. Hopefully that made sense.
I think that was a very thorough answer. And if anybody needs any follow-up on that, you can write in the Q&A. Next question is, any plans on Balancer in Polygon or other blockchains?
Yeah, Balancer is on Polygon already and has been for some time now. And it's also deployed on Arbitrum. And it is also on Phantom, but through a team that has deployed a fork of Balancer and is partnering closely with the Balancer community in that effort. So this is a very interesting sort of new innovative approach for how a protocol that is primarily focused on one base layer chain can expand and grow to other parts of the blockchain ecosystem, because there are, of course, so many other blockchains other than Ethereum that are gaining traction and interest today. And that's a lot to manage for one community or one core team. So what we're seeing right now is a very interesting synergistic partnership between a team called Beethoven X that has deployed Balancer on the Phantom blockchain and the Balancer Ethereum community. So essentially, you can use Balancer on that chain as well. And this is something that we anticipate to see in multiple other places.
All right. And then anonymous attendee asks, does the DigiShares idea require a Balancer Pro?
Yes, so as I understand, the real estate.exchange use case for Balancer is centered around permissioned liquidity pools. And that can be done through, not by creating a whole new version of Balancer, but by creating a new type of liquidity pool on Balancer that would have certain requirements and certain features to make it compliant with the needs of that pool and the use case of that pool.
All right. Jonas asked, Jeremy, what is your view on getting real world assets into DeFi?
I think that it's a movement that has a lot of energy and momentum behind it right now. And here at Balancer, I think we're really in the eye of the storm because our platform is very well suited and very well designed to bring a lot of value to that. So one of the primary ways that companies outside of crypto, traditional financial institutions, as well as crypto projects are utilizing Balancer to within the context of real world assets is to create structured investment products such as index funds or ETFs using Balancer liquidity pools, because they're on Balancer you can deploy a liquidity pool that is essentially a basket of tokens that are weighted a certain way. So, you know, you could have 4 assets that are weighted 25% each, but those weights can also be skewed in any direction that is deemed appropriate by the pool creator. And this is a permissionless protocol, so anyone can be a pool creator, FYI. And just like any other Balancer pool, the ownership stake in that pool is represented by a BPT, a Balancer pool token. So if you hold Balancer pool tokens, that represents shares in this pool of assets. So what that means is by holding this token, the BPT, this one token, you are holding a diversified position amongst the assets that are held in that pool, weighted according to the design of that pool. So that's really a perfect mechanism for creating index fund products. And this is highly applicable to companies that are looking to bring tokenized securities or, you know, real world assets of different types into DeFi, and to also, for example, give investors easier ways to you know, invest into a portfolio of assets by just purchasing one token. And those end users, those investors may or may not be interacting with Balancer directly because everything that's happening in the background on the infrastructural layer on Balancer can be abstracted from that end user who is simply an investor looking for exposure to certain sectors or assets, and doesn't need to be a DeFi expert, doesn't need to be a blockchain expert, doesn't need to understand how Balancer works, which quite frankly, it's pretty complicated, but that's really the point. Balancer is first and foremost a tool for development and creation of financial products and services that can be offered to a wide range of different audiences.
All right, very good answer. The next one is, have there already been LBPs? Any recent ones as example?
Yes, there have been many LBPs. I believe the first one was over a year ago, and I want to say September of 2020. The most recent one that comes to mind is Merit Circle. And just a point of clarification, LBPs are not only for securities or securitized assets. LBPs are for any crypto asset, any token that can be traded on the Ethereum, Polygon, or Arbitrum blockchain. So yeah, Merit Circle, actually, they broke all the records with their recent sale. It happened last week. They raised $100 million through a Balancer LBP, and they are a NFT gaming project.
Yeah. All right, very good. We have another one from Jonas. How do you think regulations of real-world assets in DeFi will evolve? For example, will KYC be implemented for all sorts of real-world assets?
Yeah, so first of all, I'm not a legal or regulatory expert at all. And
thank you for the disclaimer.
Yeah, and our job at Balancer Labs is not to be the ones who are, developing legal, navigating the legal frameworks for the assets that are being put onto Balancer. Balancer is a permissionless protocol. You can put any asset on Balancer. So depending on the assets that you are bringing onto the protocol and the way that you're using them and the jurisdiction that you're in and the jurisdiction that your customers or end users are in, that will, the burden of that is fully on your end. And I will add that, as mentioned, it's a big area of interest and a big area where Balancer Labs is spending energy today is to provide the types of tools that teams that are looking for compliant DeFi solutions need. So it's a collaborative effort, such as the one with Real Estate Exchange, where together we're the technologists, right? We're not the lawyers, we're not the real estate experts, we're not the asset valuators, none of that, right? We're the technologists here. So our job is to listen to the needs and requirements of the people and companies and teams that are using and building with our protocol, so we can provide those tools.
Very nice. Unfortunately, we have run out of time. There are still a lot of questions that are for you, Jeremy, specifically. But I was thinking maybe while you wait to join the panel, you could go into the Q&A and type some answers to people. That could be very useful. I think there are many good questions there.
Sure. It's a busy day and a lot of juggling, so I'll do my best. And I would just also mention that if we don't get a chance to talk about something here today, you can also find me on Twitter at IMMUTBL, immutable, or you can send me an email, jeremy@balancer.finance.
Very nice. Thank you very much, Jeremy. That was a very pleasant chat.
Thank you.
Yes, see you later. Bye-bye. So next up is Benny Isenberg. Benny, are you here? There you
I am.
are.
How are you?
I'm
Can you
very
hear me
well.
well?
How are you?
Always good, and thank you for having me today. I must admit that it's not an easy task to speak right after Jeremy, but there are quite a lot of things that my dear friend has mentioned that are going to resonate very well with what I'm going to try to do here. Some than Jeremy, I have no presentations, but we are not going to do an AMA. If you would like, and if you allow me, I would like to speak a little bit about ethics, about what is the real challenge according to my vision and Concordium visions when it comes to mass adoption of the blockchain industry. And we will speak a little bit about what Concordium also is doing on the field. And I've noticed, Jeremy, I don't know if you are still here, that you are still not integrated with Concordium, so we'll have to discuss, definitely. Concordium, just to present a little bit what it is, it's a layer 1 blockchain with an identity layer at the protocol level and with real and a finalization for every single transaction. And it means, in another way, that we have taken the regulation or the compliance challenge in a very serious way, and we have created maybe the closest solution to answer I would say, the regulation call. But this is the second part of this little, presentation. What I would like to discuss with you guys today is mostly, the necessary ethics that must, govern also what we are doing on a daily basis in general, and more especially in the fintech and the blockchain world. Just to make sure that we understand each other, by ethics, I don't speak about, morality or the way the Judean Christianism has defined ethics, meaning speaking about what is good and what is evil, or in another language, if you want to, what you can do and how you can be judged by your peers. Ethics is more a concept of a glue when it comes to the social contract that is governing our societies today, and that must be also applied on every new single society, whether it is a virtual society or a real society. In general, ethics is well known in the tech world, and especially thanks to two big philosophers. The first one is Hans Jonas, that has created back in the 70s the principle of precaution, that is now, governing most of the new laws that are taken by the big democracies. And in another word, it just, forces you to think about the next generations when you are doing something on the technology side, but not only. There is another principle that was directly coming from the ethics in general lately, and this is coming from the German philosopher Karl Popper, and it is the principle of reciprocity, or if you want to, the golden rule, as Karl Popper has defined it, that is governing most of the open source today, approach, and especially what we are doing in Concordium. But we will speak about that if we have some time. But in general, the question that we need to answer together today is why ethics is so important today, at the eve, I would say, of the birth of a new universe, like, Zug is beginning, to build the metaverse, and especially a little bit before the machines, if you allow me to speak like a matrix guy, the machines will take over. It means that ethics is today a tool that we need to use in order to be able to still be able to control from a pure human point of view what is done by the machines and by the technology. But in general, there are some postulates that are, really interesting to understand in a global way. We are losing control, like I said, over the machines. There are some programmable piece of codes that are governing today our lives on a daily basis, but will govern our lives much more in the next future. There is a trade-off that we need to discuss of when it comes to the Western morality that was governing what we were doing until today. And like I said before, by morality, I'm speaking about good and evil judgmental approach. And we prefer, as you know, to discuss about ethics, which is much more related to what is allowed and what is forbidden. But in general, ethics is one of the tools that could reconnect the humanity with the technology world after what I consider personally as the disaster or the failure of Web 2.0. And a little bit before the rise of the metaverse. Web 2.0 was a very nice promise, and I was there 20 years ago when we have assisted, we have been seeing, the birth of this new era in the digital world. A lot of promises were done, and in the end of the road, 20 years after that, we have created a monster ecosystem where the product is us, where on a daily basis, people are trading our digital selves without asking for permission, where privacy has disappeared, and when transparency is governing most of the things that are done there. We have a unique opportunity with Web 3.0, thanks to the blockchain technology, also to create some new sets of values that could govern the next couple of decades when it comes to the relationships that you have between the technology and humanity. The situation in the blockchain world is a little bit complex from a pure, I would say, ethical point of view. Why? And this is simply because things are going very fast. And when things are going very fast from a pure computing point of view, it's very complicated, to impose some human, I would say, set of values. And sometimes, especially in the automated market maker, world, decisions are taken based on, for example, pure profit without, taking care of other kind of values that could be included in a set, I would say, of programmable data. DeFi, as the way it is used today, could be seen as an ethical threat because of the lack of regulation compliance, but also because of the lack of usability of wealth, of the wealth that is created via DeFi. I challenge you guys to go to your accountant and try to audit your transactions after you have used anything in the current DeFi space. Piracy and illegal practice, as usual, the same way it was back in 2017 and 18 with the ICO world, are also used in the DeFi world to scam people. And this is also showing that there is some need for some order in this space in order to avoid, to see some people coming for fast exit or for exit scams, where people and users are going to be the main victims. There is also another ethical problem at the DeFi level, which is what we call the limited access to wealth. Because if you think about that, we have the perception that everybody can reach everything, and there is a kind of fair access to this new wealth. But if you think about that, and if you go deeper in your research, you will understand that there is a kind of bunch of gods, like we call it, the valley gods, that are controlling a little bit less than 90% of the world, blockchain wealth, and they are not ready to share it with the rest of humanity. And more other kind of things that we can mention here that are, really problematic from a pure ethical point of view, the opacity, the trade-off between privacy, which is very legit, and anonymity, which is something that is very problematic from a pure ethical point of view. And last but not least, the finality of what our industry is doing and the use cases. So far, we are speaking a lot about, how blockchain and how the crypto world are able to change the world. But as somebody that has begun his career as a Bitcoin miner 10 years ago, did a couple of ICOs, co-created Beam Privacy, which is a privacy coin, and now leading the marketing at Concordium, I can assure you that for the last decade, I have some difficulties to see, what is the real use case of our industry. There are some stuff that can be done, that's for sure, but I'm still waiting for the big revolution that we were promised. It's not going to happen. And another point about, the situation today, the ecosystem that we call the blockchain world is claiming to be, on the crypto anarchist side of the map, when in reality, it is a big mess that is happening inside. And by anarchy, we need to understand something that was defined by the French philosopher Joseph Proudhon, which has defined for the first time the concept of anarchy, the way I'm going to quote him. It is order without power, but nobody has said that you don't have to have any kind of order. How do we express ethics in tech? And I'm going to be very quick on this because, as you can imagine, I can definitely go on quite a long time when speaking about this. We express ethics in text by defining 3 big pillars. The first one is the lingua, or if you want in Greek, the logos. It means that the language that we are inventing and populating on a daily basis that is enabling us to describe the second pillar that is very interesting for us, which is the nature. We need to describe from a pure ethical point of view what is done, either with code, either with a business language, or either with a technology approach of this new reality that we are creating on a daily basis. And once the logos is existing and the nature, I would say the physios, like the Greeks were defining the nature, is described, then only we can define a set of values and rules that are, another way to express ethics. What we do at Concordium, and this is going to be the last part of my little presentation, what we do at Concordium is something that is very close to what I tried to explain a little bit before. We are trying to define a new way of discussion and a new logos that will include very much inside the necessity of being adopted from a pure mass point of view. And we believe at Concordium that no mass adoption will happen if the regulator is not involved in the process of defining what is allowed and what is forbidden. Again, very far from what is good and what is evil. We have a construct that is supporting what I'm trying to say by the fact that we have an identification layer at the protocol level, meaning that each and single transaction is trackable, but protected also by zero knowledge proof, a very interesting technology. And it means that if you play by the rules, you will be more protected from a pure financial privacy than anywhere else. But if you don't play by the rules, then you will be accountable for your transactions and for your actions. Our solution is a kind of smart and sensible balance between identity tech and privacy tech. We have real finalization in a couple of seconds, which is not the case when it comes to some of our competitors. We have also launched a very interesting initiative that we have called the DevX initiative and allocated quite a lot of resources to support open source maintenance and open source initiatives from a pure holistic point of view, not related to Concordium and not related to the blockchain world. We believe that at Concordium, by giving to the collective, we as individuals, we will benefit very much, but we don't expect to get anything in return in reality. And to conclude, I still have 2 minutes to finish. Ethics in tech does create a kind of new social contract that is really needed to be designed by human beings and not by the machines before it will be too late. And this new social contract will govern the res publica, the same way the philosophers were defining it. Res publica in Latin means the public thing. And we are in a deep need of this new social contract that will help us to understand what we can do and what we cannot do, and mainly to agree on the fact that not everything that is possible to be done must be achieved. And that will be my last sentence. Thank you very much for having me and letting me express, this philosophy bullshit, if I might express myself this way.
Very good, very good.
Yeah.
Well, we don't really have time for questions, unfortunately. But you will be joining us in the panel, yes?
Of course, I'm looking forward to it. That's one of the most important parts of this session, I would say.
That's true. That's where the magic happens. You get to agree and disagree with everybody else. Yes, very, very good. So if there are any questions specifically for Benny, please go to the Q&A and write Benny followed by your question, and then we will save it for Benny for the panel. All right, thank you, Benny. Next up is Luis Miguel Alexio. Luis, are you here?
Hi, Mate.
Hello, there you are. Nice to see you.
Good morning. Good morning, you all. Well, good night from here, Brisbane, Australia. So it's 1 o'clock in the morning, so I am fully awake. Don't worry.
Oh wow, yeah, it's such a global market these days.
It is.
Yeah,
What
well,
am I
thank you.
doing on
Thank
my
you.
present? I might just bring on the presentation onto the screen.
Yeah, that's fine. Please go ahead.
Okay, can we see that?
We can see it. It's working perfectly.
Fantastic. Okay, hi all. Lewis Miguel Alexo from BrickBC Projects, based in Australia, but focused on the global markets. We are a DigiShares client, so thank you for making time to listen to our project and specifically in terms of the secret of liquidity. Just a bit of an overview in terms of what I'll be covering. So basically, BrickBC in terms of who are we, what problem we're trying to solve, and what is the particulars around it. I think before we talk about liquidity, I think we sort of need to put a bit of content around the barriers to property. So it sort of provides a bit of a lead up in terms of talking specifically around the liquidity issues and our approach, what we're doing about it from a BrickBC perspective. And then basically covering on the liquidity final outcomes in terms of from our perspective, and how sort of that phases out over the next few years. So just diving into it. So again, so who is BrickBC Projects? So we are a real estate property tokenization platform. We are Australia focused in terms of Australia property focused, in particular around Brisbane, Gold Coast and Sunshine Coast, which is what we call the Southeast Queensland. As we are proudly been named the 2032.
Sorry, Luis.
Yes.
Can I just interrupt? I just saw you're not on full screen, and that might make it difficult for some people, especially on iPads, to actually see your slides. So can you see if you can press full screen? You may have to stop sharing and then go to full screen and then start sharing again. That seems to work for a lot of people.
Try that again, yep.
Is it working?
Okay, just bear with me for a sec.
Yeah.
You can see that? No?
You should be able to make it work. I just checked and I made you a co-host to make sure you got all the buttons you need.
Okay. You can see that?
No, unfortunately not.
Let's bear with me. Just go to that. Let's try that again.
So we're sorry for everybody waiting to hear Luis's presentation.
Let's fire that up again. Not working? Not seeing it there?
I'm seeing your screen now, not your slides, but I am seeing your screen.
You are? Yeah. That might work now. What about now? Can you see that?
Yes, now they came up. So I think you just have to go down to the bottom of your presentation and then press present.
How's that?
Yes, thank you very much. Now I'm happy. I'm so happy.
Apologize for that, Paul. Yeah, so basically, as I was saying, we are proud. We were announced the 2032 Olympic City, so we're very proud, and we see a lot of activity over the next 10, 12 years in relation to that. So we are an Australian private company based in Brisbane and focusing around that property. In terms of our key people, myself as a managing director and co-founder, and Melinda Alexo, she's also a co-founder and head of property acquisition. Bit of background, I think, sort of from where I've come from in terms of being a CPA over the last 28 years and seeing the challenges in terms of SMEs and being a strategic advisor to them. You sort of do learn a lot what the challenges are dealing with traditional markets in terms of traditional finance models, the clunkiness of traditional models in terms of buying property. So I've seen it all, you know, horizontally and vertically in terms of all the challenges that goes with it. Obviously, being personally involved in property for many years also gives you a great insight in terms of what those challenges are. So working with other clients over the years, builders and developers, you get to see quite a lot. Again, given my background and born in Portugal, but raised in Australia, so still speak the Portuguese language. So, bom dia para todos que estão aí, que são portugueses e brasileiros, já roda do mundo. And sort of a bit of a shout out to all the in the Portuguese. Moving on to, I think it's enough about us, about me. Well, why did we actually set up Brick VC projects? Again, given my background in dealing with all those clunkiness that we've experienced over the years, we saw an opportunity to also be able to share the opportunities with people that have been closed out with access to property. So whether it be young people, financially challenged people, people never banked before, people in emerging countries, I like to call them emerging countries rather than developing countries. We see people that basically got access to a phone, but still haven't actually banked before. Also, small, medium-sized business owners, especially in the early life, they're also locked out in terms of being able to access property. So there's quite a lot of people out there that I've seen over the years that have actually been locked out of property. And then we start talking about in terms of, you know, what could that mean for the property sector by allowing all those people in? And we see property tokenization as a great avenue to expose quite a large percentage of the world population to property. So in terms of, we see that anyone from around the world, anyone from any part of the world can have access to property with our project, which is our first one's going to be launched soon. We basically say we can buy one token for as little as $80 US for one token, and the ability to sell down in a secondary market those tokens as they go along. So again, that's our why around why I started Brick VC, why we see the ability to share with the rest of the world that never access the property. So basically our platform in terms of what we do, how we do it, is basically tokenizing property. So we have one property, one company, one Brick token series that represents that property. Properties are rented out, held indefinitely. Our net rent from each property gets invested into a crypto portfolio. So basically each of our Brick token series, Brick token, the value lies from the actual property value plus the crypto portfolio in that specific Brick token series. Probably just to clarify, Brick, BRIK, which is there's no relationship to the new native token by DigiShares with the real estate property exchange native token of Brick. So just probably clarify that. So again, we see our Brick token has a bit of a hybrid, a bit of like a hybrid stable coin, where basically the property, it's backed by property with exposure to the fast growing crypto values in now and in years to come. So we like to call it a bit of a hybrid stable coin because property doesn't obviously fluctuate like the crypto market does, but I think people get the best of both worlds. But obviously the big part of it being the actual property value behind it. So we're calling our first project just quickly the Brick Koala token series. So that's a property based in Brisbane, 5 kilometers to CBD. There's going to be 33,000 tokens available for sale that we're putting up. Each token $80 US. So basically, just it's going to generate gross rent around it, and as I said, net rents invested monthly into crypto portfolio. There is that koala, as I just mentioned, the Big Koala token series. So these slides will be available. So again, some of that might be a bit small as on that screen there, but yeah, you'll be able to sort of see what our first project looks like, which is hopefully by the end of this month be launched. The DigiShares teams are working hard behind the scenes to make that work for us. So in terms of we start talking about the major barriers out the property. I mean, this is not rocket science. I think we all know what they are, but just put a bit of context with around it. So we've got the long process to purchase property. So you know, from when you sign a contract to settlement, very old manual paper-based systems. We still got them here. I'm sure a lot of people experience that same thing around the world. The finance approval process, it takes a long time from when you start that process. The financial requirements for the traditional financiers around serviceability, around the security demands. Again, that's always very challenging. And the finance approval profile status. Financiers, as we all know, they like to put you into a status in terms of where you sit. And I've just got a little round pie chart there. You're either too young, so between 18 and 35, you're locked out. This is generally speaking, obviously. Too old, people, once they get to 50 and to 65, you're just too old. Don't even think about it if you have a 65 to borrowing funds to buy a property. You got the unbanked, never banked before. Some of the you know, countries around the world, African region and so forth. And you got the business owners. So any sort of business owner in the sort of in the start, in the beginning, that you know, from 0 to 10 years, always find it challenging trying to actually buy properly because of the attitude from the traditional financiers. And as we know, in terms of there is high transaction costs. So when you're buying, obviously, got various government taxes, legals, finances, finance costs. When you're selling, you got various government taxes again, but in different forms, and legals, and we all love the agents' fees. So we see that as obviously major barriers. From in terms of again, if we ever look in terms of how much percentage of the population really is actually locked out of owning property, given what I just mentioned, that actually adds quite a lot. So it's a very narrow market that actually can buy property. So in terms of the liquidity, well, we all know it's a lumpy asset. And again, we were taught it's like the ultimate number of buyers and sellers at a specific point in time. And again, we're going through some challenges here in Australia, where properties, you know, property gets listed. You know, just the other day there was, you know, 60 people turned up to buy one property. Everybody was disappointed except the one person, and and that's the common thing at the moment in Australia. So a lot of buyers wanting to buy, but the stock's not there, and there's a lot of people that are missing out and just giving up. You got affordability is narrow because we're high increase in property prices here in Australia and around the world. People I speak to in the US, they experience the same thing. And one thing that's again, it's a major barrier. Like not a lot of people out there accepting cryptocurrency to be able to pay for property. Obviously, fiat's still the majority. The only time you can actually buy properties with fiat currency. So again, there's a substantial amount of wealth out there in cryptocurrency. Young people of all sorts of ages, actually, that have got a large portfolio of cryptocurrency that they want to spend or invest. But again, they don't want to be going through all the various cycles and gas fees to be able to convert that. So again, that's quite a large area from that perspective that really is available. We start talking about geographical locations. Again, it does restrict people to a certain location, whether it's because of foreign ownership rules, or simply due to their circumstances that can only invest in this particular geographical location. So yeah, that continues to be. Again, in terms of what is our approach, our approach in terms of when I first started finding a platform provider, a software company like DigiShares, we looked at a few, and my initial discussion with Klaus was, was a secondary market. The secondary market was critical, and he did mention in terms of what was happening as part of the plan for DigiShares. And so again, we engaged with DigiShares to build our platform, knowing that we were going to be very much catered for from a secondary market perspective. So again, just quickly, and I'm sort of, just to give me 1 minute, I'm running a bit over time. So basically, we see in terms of the liquidity approach is to build a brick family community. It's going to be community driven. Trust is a big thing when you're building a community, and we're building a community for the long term. Trust is critical. Given my background as a CPA, and obviously working with people and businesses, there's a lot of trust that goes on. So again, this is the trust that I'll leave every day in dealing with people. So for building a community, trust is critical. Want a community that's knowledge sharing. So we're here for the long term as a community, sharing knowledge across the various parts, what's happening in property, what's happening in crypto, and so forth. Because they'll take us on a very long-term relationship, given what we're trying to achieve, and having people being collaborative in terms of how they deal with each other as a brick family community. So we see that as critical in building our brick family community that's going to create help with the liquidity side of things. We all know that there's always, when you set out and make plans, you always set out that you're chasing goals. There's always going to be a why you're doing something. So we see ourselves building a long-term community, that engagement. It's a bit like, I've got some diagrams on the right-hand side there. I'm not sure if there's any Tampa Bay Buccaneers NFL followers there. I managed to get their playbook to that in terms of winning their Super Bowl, the latest Super Bowl. So we see in terms of you've got to create activity for people to be engaged in the long term. So there's got to be an activity that's going to be chasing goals. Whenever there's a playbook that's put in place with for football. There's a purpose why people are doing something. There's an end goal in place. As you can see there, the 2018 FIFA World Cup there. We can see the French playbook there. So again, that's what won the World Cup. I'm not too sure with any French online, but there's the little playbook there. So we always see you've got a plan, you've got to start, it's got to be a journey, there's got to be goals. And we see activity with a purpose as part of our brick community to get on board and actually on the long-term journey with these properties. So there is going to be a purpose along the way. So creating activity with goals and outcomes is critical. Each brick token series forms part of the brick game. So that's our approach in building a very liquid community of properties that basically everybody's engaged.
So, Louis, I gave you almost 5 minutes extra because I interrupted you about the screen. Do you need 30 seconds to wrap it up?
Thank you. Just about done. So in terms of the final outcomes, again, the outcomes are having numerous buyers and sellers at any given time from anywhere in the world, no barriers to buyers and sellers, click of a button to access property, minimal transaction costs, and use of cryptocurrency to purchase brick tokens. So again, we see the secondary market, the real estate.exchange as a tool for us in going forward to provide even more liquidity as we plan ahead. So thank you, and I apologize for taking a bit longer.
That's okay.
You can follow us on socials, on our website, in terms of if you want to sort of learn more about what we're trying to do from a liquidity perspective. Yeah.
That was a very nice presentation, and you are also in the panel, so don't be disappointed, people. You will hear more from Luis. Thank you very much. We have to move on to the next speaker. So Pallav, are you here?
Hello.
Very good. Hello, welcome.
Thank you. Thank you.
Yeah, so up now is Pallav from Decentralization giving his case study. So Pallav, please take the stage. I will also give you a few extra minutes if you need it, and then we move on to the panel.
No. So I will keep it very short because I am the last one in the webinar, and so people would like to keep it short. So our thesis is very simple that so you're able to see my full screen, right? I guess, yeah. So private companies no longer want to IPO, and if you look at this data from from 95, almost 40 to 60% of the VC funded companies they used to IPO, but now that number has come down significantly because of the regulatory drag and the cost of IPOs and the compliance costs, which is what it has done is that because almost all the returns are now private. So if you will see, Apple returned almost 600x in private, and yet there was a 400x room in the public markets. But that has not happened with Google, Salesforce, LinkedIn, Yelp, Facebook, and Twitter. And what that has resulted in is that the investors have flocked to private equity, and we can see the numbers, which is almost 2x. So what this slide means is that $1.4 trillion was worth of primary came into the market, and $2.9 trillion, that's 2x more, but the trading volume is very low. And the biggest reason of that is because it's still offline and still paper shares that are moved, and funds and whatever. So this is a very, very nascent space at the moment. But so on the right, there are some players. I mean, I'm sure people in this webinar would have heard of Forge, rCrowd, Nasdaq Private Markets. So what these guys do is, so they have said that, so these are all legacy players and they have not adopted blockchain yet. And they have said that we will try and solve it with the existing infrastructure. On the other hand, what has happened is, this is very interesting, where the Chinese security regulator themselves have decided to create an alternate exchange similar to the real estate exchange that DigiShares is doing, but for primary, for capital markets. And this is Securitize, and they've just recently raised $48 million from Morgan Stanley. So Morgan Stanley led the round, so unfair to say only Morgan Stanley. Then there is Adtx, so they're based out of Singapore, and they have recently partnered with a $7 billion B, and I'm sure some people have also heard about Republic. So what is happening is that there is some interesting players that are there, which are focusing, which are saying that we will build it from ground up, and then there are players who are saying that we will be compatible with the offline nature of the private equity, so to speak. So our platform is very simple. So I think, so essentially what we are saying is that the fund model no longer works, and that everybody in PE knows that funds are now dying because the LPs are no longer willing to. LPs are increasingly getting direct, and that's where we come in. We say that it's a controlled auction software, wherein you have a database and you have standard legal and financial information, data room, and trading and custody of tokens. And then this is the core value proposition for an LP for trading via funds versus our platform. So if you go to a fund, right, the cost is 17%. So that's paid out over 8 to 10 years of a fund duration, and 20% carry. We say that we'll only charge a 5% transaction fee. the ticket size is very high for people to access funds, and the number of investors are very few because it's a sales problem for funds. But because we are a digital platform, for the ticket size is very low for us, and we can onboard hundreds of investors. Funds have a jurisdiction limitation because of legal issues. Our platform doesn't have any. Then there is a lock-in period of 8+2 in a fund. In our platform, it is 0 or as per regulation, so it depends on jurisdiction. Then the LPs generally have very limited visibility on the information rights and dividends on the real assets. And then secondary potential. So if you're willing to sell a interest in a fund to somebody else, in our platform, it's a direct asset that you can sell to anybody. Then because you're digitizing it, then there are valuation models that are built and it's inherently digital. But the disadvantage of our platform is that you need to have a direct buy side expertise, which you don't need in a fund. That's what fund takes care, so to speak. And so this is our product roadmap, so to speak. So over the last decade, we have built a significant sell-side distribution, and we have access to $6.5 billion worth of assets over the next 5 to 7 years, for which we are looking for buy side, which the strategy for that we'll finalize by the end of this month. And then we have so right now we are launching with a deal monitor, deal room, and a tokenization module. And then, I mean, every 6 months. So it's also a function of how regulators are headed in terms of getting the laws there, and because everybody is launching their own digital currency, and we hope, and our strategy is that, and that is also what we are hearing globally from regulators, is that the moment they have their own digital currency, the wallet, the custody, and everything, so the blockchain support that is required, that they sort of enable. And so this is our focus. So I mean, it's not a very big TAM, but there is absolutely nobody, so that is why it makes sense. So it's almost a $600-700 billion TAM focusing on emerging markets, and so that's our laser focus market at the moment. And so now the founder has 3 options. So either they can IPO, either they can buy out or sell out, or either they can do a private placement offering. And what this essentially allows is that right now everybody in their cap tables have 4 people, 5 people. That's the maximum anybody has on their cap table. But with our platform, you can maximize your private placement, so you can onboard. So even today, regulators allow 200 investors. At least in India, that's the rule, that you can onboard 200 investors on your cap table. But generally, statistically, you only have 5. So why not the other 195? So that's what we believe the future is headed. So as I said, I will keep it short, and we can take up more questions in the panel. Yeah.
All right. Well, that was short and sweet, and very much on time. We're back on schedule.
Right.
Fantastic. So if everybody could please come on screen, everybody who's joining the panel. Klaus is here. Welcome. Louise is back. Hello, Benny. Okay, great. So today there are a lot of questions that we have noted down. And because we have a maximum of 30 minutes, I have to ask everybody to try and keep it short. We will start with the questions that have already been asked, that we have written down, that we thought were really good. And if there are more questions from any of our attendees, please write them down in the Q&A. If they are for a specific participant on the panel, please write that person's name, because otherwise it's difficult for me. I will just have to guess. That's it. So panel, short and concise would be truly appreciated. So we start off with a question for Klaus. Klaus, can you expand on how the DigiShares platform will integrate with Balancer and how the investor need to purchase the token first and then separately go to Balancer? So I guess it's about the process, Klaus.
Yeah, and I wish that Mark was still here. He's the expert in that. But in any case, we will build on top of the Balancer liquidity pool.
Mhm.
So we will create an interface for it, making it easy for real estate developers, asset owners to get their tokens listed using the liquidity pool. And possibly the asset owner will have to help create liquidity for it by providing additional tokens for the liquidity pool in order to facilitate sufficient liquidity. Yeah, that's a really brief answer. What was the last part of the question?
And will the investor need to purchase the token first and then separately go to Balancer?
No, not really. So we will build a user interface to it. So it will be fully sort of, it'll be a transparent, user-friendly process facilitated by real estate.exchange. The brick token will have to be used in order to access certain functions on the platform to build utility for it. The real estate tokens can be purchased through the platform using a standard like Uniswap-like interface, at least to begin with. So I hope that's enough response.
I think that was a very good answer. So what you're basically saying, it will be user-friendly.
We hope so.
Yes.
Try.
Very good. The next one is an open question, but I think it's very relevant for Benny, Luis, and Pilar. Maybe you agree, maybe you disagree. So we'll start off with Benny. Your view on DeFi and convergence with real-world assets.
I mean, I think that by asking this question, you already are answering it. It's obvious that DeFi cannot stay on the digital crypto assets world only. If we want to gain, mass adoption, we will have to deal with what we call the legacy world. And this is precisely, I think, what all the people here are speaking about, how to bridge between the legacy world and the new world in a very ethical way. So the answer is clearly yes. We need to bring DeFi to the other side of the map.
All right, that was again short and sweet. I love it. Luis, any comments on that?
Yeah, no, DeFi. I think a lot of the traditional banks start to wake up in terms of the impact it's going to have, especially around funding properly, in terms specifically around that. I've had conversations with some of the big players already in terms of the banking systems, and some of them are still in denial, but some of them are starting to realize that they have to be there. And I think it's just a matter of time. And so, yeah, I'm very bullish. If they don't get on board, platforms like Aave are already doing in terms of the fantastic work in that space as leaders in DeFi. So, yeah, very bullish on that.
Get on board or miss the train.
Mm.
Yes. And Pilar, any comments?
I am very bearish on crypto assets, not on blockchain. I mean, it's a very contrarian view that I have, because we speak to a lot of regulators, and we have spoken to, except the SEC, we've spoken to everybody on the planet. And what people don't realize is that, I mean, unless and until the crypto guys don't get into politics and become the presidents and prime ministers, nobody's going to, let their autonomy out of control. And but since it is a free world, and because of free speech, China is addicted. China has said that they have blocked everything because they can, and they can control the media. But the other world, they are like, we'll let them die a slow death. The cat is out of the bag, and they'll just like, okay, we'll not do anything. You guys keep doing whatever. We'll just not let you expand. So that's where all the democratic countries are headed, that they will not do anything with cryptocurrencies. And I mean, that's what at least the war has started in India. It's like 2 months after the Coinbase SEC war. And they're like, it's a big industry, you have to regulate it. But the regulators are like, no, we are not going to do anything, right? We just, thank you, fair enough, we'll wait it out. So that's what's going to happen with cryptocurrencies, right? Unless Klaus decides that he'll get into politics and he'll change the laws, and which is very unlikely. But having said that, I mean, it's a learning curve of this industry. A lot of the tech that has been built with the cryptocurrencies, that will be carried forward and will be used with what we are talking, right? That is where we spend 90% of the time, right? Real estate tokens and everything. So all this infrastructure will be carried forward. Nothing will be wasted. It's just that's how innovation happens, right? So that's I mean, and the regulators understand that. It's just that now it's a little bit too much of investor protection, so to speak.
Just would like to illustrate what you are saying, Pallav. I mean, I think that we understand each other, perfectly on this. I mean, blockchain is a technology, cryptocurrencies are a use case coming from the blockchain. But when tomorrow a cryptocurrency will come with the capacity to be really trackable in a private way, meaning if you could apply on a cryptocurrency a concept of KYT, not KYC, but KYT, know your transactions, I think that then, the democratic states of this world will be very well ready, to embrace, the crypto evolution and not the crypto revolution. So there are some stuff that are missing today that some people are building, and we are one of them.
I think Gary Gensler, who's the chairman of SEC, made it very clear, right? If you can register yourself as a security, right, they have no issues with cryptocurrency. The problem is that you can't call it a currency, and you qualify for the Howley's analysis or test, whatever they call it, right? So I mean they're not going to stifle it, right? It's just that they are saying that you have to come clear in terms of you register as a security and you do whatever you want to do, but you can't keep doing it. And I think that's a lot of that is going to happen. A lot of use cases that the industry is now seeing, right? You will find specific niche use cases which will sort of the regulator will sort of understand and find that value.
Very nice, and love that you don't all agree. It's much more interesting. Next question is for Benny. Your view on how regulations will develop for DeFi and crypto in general.
I think that to keep, the debate that we have with Pallav now is that I think that here we are going to agree, Pallav, that regulation is the key. It means that if the DeFi world is not willing to play the game by the state rules, it will disappear. I've been, in the business for the last 20 years, and that's the third regulation wave that I'm living. I used to work in the gaming industry, and I've seen what happened there. I used to live in the telecom industry, and I've seen what happened there. All those people that were claiming that they are not going to play the regulation game, they are dead today. They are not operative. So let's not fool ourselves. We can keep playing a little bit, but once, the teacher will come and will say, stop, you need to get back to class, we will have to get back to the classroom and to study. So it's not a question whether regulation will be in place, it will be in place.
Correct. So I think I would like to just add to Benny's point. I mean, if you listen to Wall Street guys, right, they are saying that Bitcoin crypto is just $2 trillion. That's just 2% of what we operate, right? So it's too small for us to really take it seriously. I mean, sure, we for us, $2 trillion is huge as an industry, right? And that's like a holy grail. But Wall Street guys are like, you're kids, man. And, and once you become a little big, we'll bring in regulations to kill you guys.
All right. Next question up is for you, Klaus. DigiShares, how will you create liquidity for a single real estate token? And who will be the issuers of such real estate token?
And now I wish again that Mark was here. The issuers will be, you could say, asset owners, real estate developers, anyone who wants to create liquidity for their asset, have it traded, maybe fundraise for it. They will be the issuers. the creation of liquidity is actually what is the real, I would say, complexity in the project. It's really, really difficult to achieve, and others that have tried before to create liquidity for many different types of real-world assets have failed. So this is maybe the key challenge in the task, and this is sort of the real innovation also, that we're working with the Balance the Tech team to develop and to try to use the new liquidity pool technology in order to achieve this. And the token, the BRIC token that we launch, this is also the primary purpose of that token, to try to facilitate that liquidity. So there's a lot of ideas and a lot of elements that go into that, and yeah, we cannot go deeper into it here, but that's, and also I'm not the real expert myself, but that's, yeah, that's a bit of an answer at least.
All right, thank you. We have again an open question. What blockchain will emerge as the blockchain of choice for real estate assets? And perhaps we should start with Luis.
Well, obviously the Ethereum blockchain at the moment, but I'd be interested to see hear Klaus's probably more recent comments. I've heard the CEO, well, one of the guys from Polymath with the Polymash, the ecosystem there. It'd be good to hear from you, Klaus, in terms of what DigiShares is doing from that perspective, because I know I've heard the guy speak, and I do like what the approach is in terms of their own blockchain. Yeah.
I can certainly comment on that. I think right now 95% of all tokenization is still on Ethereum, even though it's expensive and slow. But it has the ecosystem, right? So it has custodians, it has exchanges, it has stable coins, it has community and investors. So that's pretty hard to compete with for any other blockchain. But competition is coming, and we certainly see some interesting other alternatives. We are blockchain agnostic and can pretty much support any blockchain that is requested by our clients. That's just I have to turn on the light here.
There's an automatic
turning off of the light. So in regards to Polymesh, from Polymesh, we are a close Polymesh partner. We will definitely support it, and we really appreciate the initiative. And I think there's a lot of benefits from creating, as you could say, a tailor-made blockchain protocol, or blockchain itself actually, for security tokens and tokenization. And I think it could have a huge potential, and yeah, we will definitely be a supporter of it. We don't have any active projects in it yet, and we are sort of still waiting for more adoption. But of course, it's being pushed by Polymath and the ecosystem around them. So I'm sure it will materialize eventually. Yeah. So, but I'd like to hear also Benny and Palaus maybe viewpoint on how they see the competition of the blockchains.
Very quickly, because I'm not here an objective judge, because I'm working for a layer 1 blockchain. So I would say that the best blockchain to build on top of is mine, obviously, because we have ID layer at the protocol level. But I mean, joke apart, we have a very nice project and very nice, layer 1 blockchain that you need to check. This is something that we need to admit. Right now, the options are very limited, I would say. Everything is built on top of Ethereum, not for the good reasons, but because there is nothing else that is really valuable, compared to that yet, I would say. Ethereum has a huge problem in terms of security, in terms of scalability, and in terms of how it could be adapted itself to the regulation. It would be very complex for all builders on Ethereum and other chains when the regulator will come and will say to Ethereum, you need to comply. It's almost impossible. So I think that the blockchains that have taken in consideration this concept of regulatory compliance at the core level of their protocol will be the big winners. Concordium is one of them, but there are also other candidates like Solana, I would say, Polygon Matic. I have a lot of respect for what they have built, and some other names, but I don't want to do some promo for other chains, if you mind. Because my bosses are also in the seminar and I'm gonna get hit by them. So Concordium.
All right, and Palav, your bid for the blockchain of the future for real estate?
So I think we'll have to see, right? What, and it's very early to really say what blockchain really wins in this space. But as you said, right? I mean, Ethereum had to do a hard fork for the UK market because I think so. I agree that Ethereum is not the solution for the future. Yeah.
If I could just add to that, I think with Ethereum, obviously at the moment with the way it's thing, obviously they've been around for a while, obviously longer than the rest. There's a trust element to it, and I think it'd be hard to walk away from that trust element at this stage.
So the existing market will not walk away, but the new market that is going to be created, that will not be built on top of Ethereum. So the best example is R3 Corda. So they're very smart ex-Visa guys, and they have raised like shitload of money. And they're like, so you're correct that people will not walk away. They will keep, what has been built on what blockchain, that will stay, but the new use cases that are going to emerge, right? They will sort of find a blockchain that is cheapest for them. And the future can be, right? It might be, I mean, we should check it. So Klaus, we should connect with the digital MIT Media Lab's Digital Lab Initiative. That's where Gary Gensler also did a teaching. And what they're saying is that, so they have a very interesting case study of how TCP/IP became the leading protocol for the internet. And while there we had like 4 other competing protocols. This has happened before 30 years ago. When the internet was being built, there were 6 protocols and TCP/IP won. So I mean, we don't know, right? In that case, blockchain might have six protocols, or maybe we just have one, right? Concordium. So so just send me, right? So Benny, just that $100 that you told us, so that you can send to us.
All right, and the next one is for Luis. I guess this is a question about trust. So how do I secure that a physical building actually really exists versus the tokens that I buy? So the underlying assets, how does a buyer know that the asset is real and exists?
Yeah, I guess this is where everything's on the blockchain. I guess there's going to be part of the system. There's proof in terms of titles that basically provides the proof that that special purpose vehicle owns that property. So again, this is the beauty about being transparent and everything being on the blockchain and being very clear around those things that what is. So again, I think we're into a new world where I think people that are actually in crypto now actually understand. I think the challenge is for us anyway, over the next 12 months and beyond. Initially, the people in the crypto will understand what smart contracts are and so forth. I think it's the new people coming on and educating in terms of what is and what it can do. I think we see that we see ourselves as an educator. So 12 months on, we see ourselves as an educator to bring more people in who would actually got no idea what the crypto is, what the crypto world is. And there's still a lot of people I speak to today, people on the street. What is it? Bitcoin. They define crypto as Bitcoin. That's as far as the understanding goes. So yeah. So again, I think we collectively play a role in educating the non people who've got that knowledge around it.
Yeah. All right. The next one should be for Klaus. Who should be the liquidity provider? Should it be me as a token issuer, or can my investors be involved?
For the third time, I wish that Mark was here. I think individual investors can be liquidity providers. It's similar to how it works for Balancer. The asset owner, the issuer, can also be a liquidity provider, and we think that actually that will be necessary in order to facilitate high degree of liquidity. And we also expect that external third parties will be interested in providing liquidity for the platform, such as they do to the normal financial industry today. So yeah, that's the plan.
All right. Well, If whoever asked that question didn't think it was properly answered, you have to go and find Mark Denker. He is on Twitter, so you
Track him
have
down.
to hound him there. All right, we have one more for Luis. How are real estate objects priced / valued at issuance?
When we issue it, so the way we basically do is the total cost of the asset basically is how we price. So all our tokens would be priced initially at $80 US. Then it'll just be how many tokens that makes up total cost of that property. So again, we try to make it accessible to everybody, and given that they can buy as minimum as one token for $80 US, it makes it accessible to a large part of the population around the world. But yeah, so basically the only thing that changes is number of tokens to equate to the cost of the property. Yeah.
Very nice. And a follow-up, which state are you launching your brick?
Brisbane, Queensland.
Yeah.
So,
Which state?
Which state?
Queensland.
No, date.
Oh, date. Oh, sorry.
August,
I thought you said
September.
which state. No, state is Queensland. When? Well, by the end of this month is what we're targeting. So no pressure on Klaus and his team.
And can people follow the progress on social media if they're curious?
Yeah, it's on social media. All the socials are there: Twitters and Instagrams and Telegrams. So if you go on the website, all the socials are there.
Very nice. I think oh wait, there's one more question that came up down in the Q&A. Open question. So anybody raise your hand or start talking. Are you bullish on digital real estate assets? Additionally, why in particular are games choosing Polygon for their blockchain? So two-part question. So don't all volunteer at once.
Sorry, Mata, you just said Polygon?
Polygon.
Yes, Polygon. So why are games choosing Polygon for their blockchain?
I can start. So of course we are bullish on real estate assets. This is what this is a core business we're working on. I'm not a Polygon expert, but I think that Polygon has a nice proposition and a nice efficiency and cost factor, I would say, and we are certainly looking at it as an addition to what we're doing on Ethereum. So probably the gaming guys are doing the same.
All right. Anybody else want to add to that? No. Well, everybody, that's pretty much it for today then. Thank you to all of our participants. Join us again in January. Thank you so much to our panelists. This was a very, very good session. I think we got a lot out of it. And maybe you can finish off by telling people how they can reach out to you or inquire about your projects. So Pilar, maybe you can start.
Can you repeat?
How do people get in touch with you or follow your projects?
So you can ping Klaus and Klaus can connect.
All right. And can they follow you on social media or?
So not yet. So we
not yet.
In process, yeah. Or you can find me on LinkedIn. So you can find me on LinkedIn, or you can maybe after the call we can circulate the email IDs of everybody in the panel, and people can get in touch. That can be.
All right. And Klaus, if people want to follow DigiShares, what should they do?
I say our contact information, I think, is everywhere in connection with the event here, so it's easy to reach out. Yeah, and we also have our Twitter account up and running, and you can follow us. We upload news all the time, so go check it out. Luis?
Yeah, just on brickvcprojects.com website, you'll see all the socials there. Please follow us and see our progress. And this month, the first one, Brick Koala. Watch that one.
Thanks for staying up so late, Luis. That's great.
Thank
Much
you.
appreciated.
Pleasure. Thanks,
and
guys.
Benny, finally, if people want to get in touch with you, what do they do?
They send a letter. No, joking. I've put, my handle here, in the group. It's at Benny1618. You can find me on Telegram. You can find me on Twitter. And if you want to know more about Concordium, concordium.com, and mainly watch the news because we are coming with big stuff.
Very nice. Well, thank you everybody for participating.
Thank you very much for having us.
Thank
Yeah.
you. Bye.
Bye-bye.
Bye bye.
Bye-bye.